In this video, I'm going to share 3 different stocks that are under $10 that represent pretty good buys. One of the stocks on this list I actually got through Robinhood. It was one of the free stocks they gave me. So you might actually end up getting one of these stocks if you use the Robinhood link at the bottom of this video to get a free stock. So when it comes to stocks under $10, the attractive part is you're able to buy more shares, but you want to look at valuations, you want to look at the company as a whole. And just because a company is low in price doesn't mean it could dramatically multiply. Market cap was something I also took into consideration with this list. Only one of these companies has over a $1 billion market cap. The smaller a market cap is, the more potential there is for the stock to multiply, given that it is a solid company. So the first stock on this list is Libsyn, ticker symbol LSYN. This is one of my favorites. It is a place for podcasters to host their shows. So I'm a podcaster. I've done multiple shows. I use Libsyn. I know how it works, and I'm definitely recommending it here. So Libsyn starts at $5 per month. If you upload more episodes that take up more storage space, you get charged extra for that. And they also have a cool partnership where if your podcast has enough of an audience, you could get sponsors from them and they take a cut from that. And a lot of the top podcasters use Libsyn. It's definitely beloved by many podcasters. Some of the flaws in the stock, such as a management that really limited the potential of growth. One of those scenarios where you have good company, okay leadership. There's been a lot of activism lately and people stepping down, which has created the opportunity for further growth. If you look at valuations, Libsyn is roughly at around 4 price to sales ratio and in the 40s in terms of forward PEs. Several companies such as Spotify and Apple have made it a priority to push podcasting. For instance, Spotify has agreed to lucrative contracts with some podcasters and increasingly prioritizing that in their apps. Podcasting is also relatively early in the game, so there were 1 million podcasts as of March, and it took a bit to get to that number, but now there's 1.5 million podcasts. So in just a few months, we saw 50% growth in the number of podcasts. And all of those podcasts, they need a hosting platform like Libsyn, which starts at $5 per month. And when you are on a platform like Libsyn, whether it's for podcasting or their hosting, people stay there for a long time. So it's a solid recurring revenue stream for them. And as podcasting continues to grow, which based on all the projections, podcasting is set to continue growing as it's grown 50% more podcasts since March. And as those podcasts create more episodes, that's going to be extra money Libsyn makes because people are going to hit their gigabyte quota limits. That represents a compelling opportunity for Libsyn stock to continue marching forward. And if you look at the stock over the past 5 years, there's been a lot of growth for the shareholders who got in early, but there's still plenty of narrative left in this story. The second stock that I recommend that's under $10 is Limelight Networks. This is a stock that is a content delivery network, one of those stocks set to benefit because of the pandemic. And when they released earnings, the stock got destroyed because even though the earnings report, it had revenue growth, the company grew at roughly 15% for their revenue, it just wasn't what people were expecting. People were thinking that that number was going to be a lot higher, so the stock got destroyed. And because of that reaction, it has created a buying opportunity for people who want to get in. So it has very attractive metrics compared to something like a Fastly or a Cloudflare. Limelight receives a lot of comparison to Fastly. They're not exactly the same thing, but they're somewhat similar. But it is telling when Limelight has roughly 2 price to sales ratio, while Fastly is in the 31 range in price to sales ratio. And if you look at the forward PEs, it's just astonishing how, relatively speaking, Limelight is undervalued when you put it right up next to Fastly. And the interesting thing about this drop in Limelight is that it puts the stock below its March low. So in March, when every stock, like you didn't really have any survivors in March, and they were all getting destroyed. Like Limelight got even lower than that because of the reaction to earnings. And it's still in a position to benefit from all the stuff that is happening. It has a lot of great growth prospects related to the content delivery space. And with streaming also picking up because you have more people staying at home, you have more streaming options, Limelight is set to benefit from that as well. So you do have a few growth catalysts for the stock. Yes, it did not grow as much as people wanted. And this is one of those scenarios where even if a company grows, it can get hit hard in their earnings because it didn't grow to meet analyst expectations, or it grew a little bit, but the stock price went up a lot. And then there's got to be some, some downward motion to compensate for the fact that this isn't as much of a growing company as people thought. Another big thing about the earnings report was that they missed on their EPS. A big part of this is that they took on long-term debt, which now they have that extra money at very low interest rates to help them with future initiatives. So I definitely see this stock as a buy. I feel like there is some comparison to Limelight and Fastly. I feel like the comparison's not perfect because Fastly just has a greater customer base it can serve, and Fastly has better margins than Limelight. But at this valuation, Limelight is a good opportunity. The third stock, which I did get through Robinhood, and you might get the stock too through Robinhood for free if you join through my link below, is Glu Mobile. This is a company that produces apps, video game apps that allow their users to engage in a freemium model. So the apps start out as free. You could buy stuff in the games to get more buff, to have like a better experience in the game. And they make a lot of money that way. They've been getting really innovative with some of the different apps lately. One of their apps, not only is it a freemium game model, but they are combining an e-commerce element so that not only do people buy stuff in the game, but they buy stuff in real life. So with that in mind, Glu Mobile, it is on the trend right now where people are looking to play more video games because they're looking for different things to do at this time in history, and they are set up for some additional runway. The forward PE for Glu Mobile is 17, which is certainly attractive, and price of sales is closing in on 3. So again, these are pretty good metrics for a company with growth, and it did recently smash its earnings, no surprise, because of the pandemic and more people staying inside. And again, this is something where if people get into a game, they're likely to stay on that game and play it for a while. It's not as locked in as a podcaster on Libsyn, but since Glu Mobile keeps on creating additional games, they could ride on different waves of video game popularity. So I definitely think these 3 stocks present compelling opportunities. They are all under $10. They're all stocks that you got to just go through the link in my Robinhood and you get a free stock. It could be one of these 3 stocks or something much better. So in any event, I hope you enjoyed this video. Let me know in the comments which of these 3 are your favorite and which stocks you are looking at, whether they are under $10 or some other price point. Hope you guys enjoyed this video. I'll see you guys next time.